like to welcome everyone. My name is Mandy Purcell, and thank you for attending the 5th Annual Commercial Executive Magazine's Fall Forum. Thank you, Bert, for joining us. Looking at this amazing panel, we have 388 years of magnificence on the stage, and that's including you too, Elliot. So 388 years ago, it was 1626, when Peter Minuit purchased Manhattan from the Native Americans for $60 worth of trinkets and beads. So that's the equivalent of $24. And I think Don Diamond might have been there advising him, don't you? Don, you're supposed to laugh, not talk to Sarver. Okay, I guess I can't be a comedian. I'll just follow. So, speaking of great investments, I would like to thank all our sponsors who made today's event possible in supporting Commercial Executive Magazine. Special thanks to Wells Fargo, who have been our premier sponsors from the beginning. We also have Wilming Construction, our beverage sponsors, which many of you are currently enjoying. New Law US, name tag sponsors, so we know who we are. Then we have Alliance Bank, who will be announcing the Broker of the Year. So now I'd like to introduce Don Gardner with Alliance Bank to announce this year's Commercial Executive Magazine's Broker of the Year Award.
I'm honored to announce the much appreciated award for Commercial Executive Brokers of the Year. And I actually do not know, but hold on. Congratulations to the 2014 Broker of the Year from the team of Cassidy Turley, Michael Hackett, and Ryan Schubert.
Congrats.
Good job, Mark. Congratulations. Good job. Good seeing you. Yeah, come on.
Thank you, Mandy. Thank you to everybody that voted. We're looking forward to a great panel here, and that's probably about all you want to hear from us tonight. So have a good time.
Thanks, Don. Okay, Elliot, you're on.
Well, welcome everybody. We're going to try to keep this moving. We have, let me just get this stuff out of here, what is an outstanding panel. Bert Lopez, Scott Nauer, Marty DeRito, Robert Sarver, of course, Don Diamond. All exceptional people. It's interesting if you look at their backgrounds. We have two rags to riches stories. We have two starting with a small fortune, ending up with a large fortune story. And Scott, I don't know what you're doing here, but you know. Let me start with a couple of quick stories. First, as you know, I'm an economist. I'm not somebody who usually I talk on a panel. I don't usually moderate it. And an economist, as you probably know, is somebody who likes to play with numbers but didn't have enough personality to be an accountant. So, yeah. And I'm to tell you one story. I actually was hired by Len Huck, who I think is still around. He's in his 90s. He's quite a guy. And when I went in to interview with him, he interviewed me for about 2 hours, and after the interview, on the way out the door, he said, "Let me ask you one question. How much is 4 times 9? And I said, of course, 34. And I walked out the door, and I said, what, 34? Obviously, it's 36. What am I guess I'm not getting that job. So 3 days later, I got a call from him and said, come on in, you got the job. So the first day I was on the job, I went in, I said, Len, you know, I gave you the wrong answer. You asked me how much 4 times 9 was, and I said 34 instead of 36. How come I got the job? And he said, well, of all the economists I spoke to, you were the closest. So the other thing that's interesting about this panel is that they're all local. 3 of them are U of A graduates, 1 is an ASU graduate, and 1 is from the University of Liverpool. And Scott, after a quick online search of the University of Liverpool and its online master's degree program, I am now too a graduate of the University of Liverpool. Now, it's interesting in talking to the U of A guys about the ASU guys, the U of A guys tell me the only way to get an ASU graduate off your porch is to pay him for the pizza. Now, the ASU guys tell me you can't argue football with a U of A guy because it'll basically, he won't be able to get your order for a Big Mac correct. You know, so it works both ways. Let me start by talking. The format's going to be this. I'm going to ask each guy some questions for about 10 or 15 minutes, and then when it's all over, for those of you who are still sober and able, you can raise your hand and ask questions. I'm going to start with Bert Lopez, and just so you know, this is a Horatio Alger story. This was one of the more interesting things I've ever read was your resume. I appreciate that. Born in Nogales, Arizona, raised in Mexico till he was 11, came back after his father passed away, youngest of 5 kids, worked 40 to 44 hours a week to keep his family afloat, put himself through U of A, ended up with a Big 8 accounting firm, Deloitte, and then somewhere along the line, somebody gave him a book about how to turn $1,000 into $1 million, okay? Well, his company has owned and operated over 25,000 apartment units, and presently they own over 11,000 apartment units in Arizona, making them the largest apartment unit owner in the state of Arizona, so I guess you've made it in that regard. And that is a great story. With that as a background, I just got to ask you, what still drives you after all these years?
I think it's the art of the deal, without any question, and preservation of wealth.
And you still like it? You're still enjoying it?
Oh, I love it. You have a deal for me?
And what do you think of the apartment market right now?
I'm a firm believer in the apartment market. I think like every good thing, it always comes to an end. Today, it's a very heated market. We're doing very, very well. But we're going to have cycles. Unfortunately, it happens time after time after time. We'll overbuild. Interest rates will go up. Cap rates will go up. Rents will not go up. Consequently, prices are going to perhaps suffer a little bit. Those people that got over leverage are going to have to figure out what they're going to do. And that's where we jump in and take advantage of those opportunities. We've done it time after time since I got into this business. First deal I did apartment deal was 1973, and I've gone through 4 different recessions and survived every one of them. So.
Well, yeah, I was going to ask you, to survive 88 through 90, this is really you and Robert, for 88 through 92, and then 2008 through 2010, those were really treacherous periods that a lot of people did not survive. How'd you do it?
Well, the RTC days were very, very tough. We went through about 5 years of, if it would have lasted another 6 months, I probably would have been bankrupt. Fortunately, what we've done, and we still do today, we keep a lot of cash. As you know, real estate has its ups and downs and valleys, and if you can't survive the valleys, next time the real estate recovers, you're not going to be there to reap the benefits. So consequently, we've been able to maintain very good cash reserves. We hate it because we're bankers at various tables out here only want to pay us. And I don't want to say, but they tell me we get a very good deal at 25 basis points. But unfortunately, we got to keep cash. Cash is king at any time. I'd like to have it all invested, but by the same token, if we do have a downturn, you don't have the cash, you're not going to be able to survive.
You worried about a bubble now, or what do you see?
I think we're okay here for a little bit longer. Arizona, I think we're very well positioned. The millennium generation, they're renters. We find in our new apartment communities that most of the people that are renting, they're renting by choice. They could be homeowners, but the millennium generation, I guess it's known from the anybody that was born after 1980, and they represent 27% of the population from my understanding. So I think that market is going to continue to be strong there for a while unless we screw it up and the banks continue. Anybody can be a developer as long as you can get the financing. So as long as the banks keep lending you money, we're going to continue building.
It's true. It's true. Why did you choose apartments and not retail or office?
Well, the book I read that you referred to, How to Make $1 Million, or How to Turn $1,000 into $1 Million by William Nickerson, talked about apartments. Apartments was a good way to have cash flow, and at the time it was a good inflation hedge. When I started out in this business, we had inflation. We lived with inflation. Rents would go. The beauty of it is that you could finance long-term debt, fixed debt. Rents were going up, cash flows were going up, and consequently the properties were appreciating. So that was my first venture into the business, apartments, and I've been doing it now for 40 years. So done, I don't know, quite over $1 billion of real estate deals. So.
If you had money today, where would you put it?
Apartments, if I could find the right deals. We're both a buyer and a seller today. We're selling because there's people buying out there, so we're glad to sell at today's prices. But by the same token, if we can find a good deal, we'll buy. But we're finding out that in most deals that we make offers today, we're coming short. We can't get them, and that's okay. That'll be the time that there'll be another opportunity. Might not be me, but my staff. It's
You said you're
very
buyer
involved.
and seller, so what would cause you to sell? The cap rate?
Money.
Okay. Okay. Can't argue with that. You've known a lot of successful people over the years. It's the way it works. What traits do you think somebody who's really going to make it needs?
Well, first of all, you got to have good credit. Without good credit, the banks could tell you, and that once you screwed up your credit, it takes a long time to recover it. Integrity, that speaks volumes of you. A handshake is better than 100 pages of paper of documents. And then perseverance. Don't give up. You continue working. You can go to a bar and meet somebody and ask 10 times, and all you need is one yes. So that's my theory. I keep asking different ways.
I'm almost afraid to ask the next question. Skill versus luck.
Well, when Lady Luck knocks on the door, you got to be willing to open the door. I've known a lot of people where Lady Luck knocks on the door and they don't know how to take advantage of it. But there's a lot of luck and has to do with it. Luck has a lot to do with it. A lot of people work very hard and they never have the luck. So it's a combination of the two of them, taking advantage of when it's there in your door, letting it in.
How'd you deal with your greatest challenge?
Well, we've had challenges. You don't get to where we're at without having some failures, and we've had our share of failures. Luckily, we've had more successes than failures. But that's the way we learned. Every time you have a failure, you learn and you move forward, and you just keep on moving. So the way you deal with it, you just one thing that I learned a long time ago. I was an introvert and afraid of people, and I read a book. How to Start Living and Stop Worrying by Dale Carnegie. And what I learned from that book is that anything I do is I look at it, what is the worst that could happen? If I can't live with the worst that can happen, I don't do it. If I can live with it, I move on, and if it happens, it's okay. I already had accepted it before I took the challenge. And that's anything I do in my life.
It's a good attitude. It's a great attitude. One of the other pieces, things I wanted to ask you about, we've got basically a panel, the majority of whom either started out or are still in Tucson. Why Tucson?
Well, believe it or not, I came to Tucson in 1980 to retire. I had made so much money at that age that I thought I could retire on that money. And it was pretty good. But we also had a 10-year-old daughter. And if we didn't move from California out of Los Angeles at that age, or when she was 10, it would have been very difficult to move a 10-year-old or a 15-year-old at that point. The 10-year-old was very easy. So at Tucson, but if I had a choice today, I probably would have come to Phoenix.
Because?
I think well, I did very well in California. I spread out when I started out the company. Within 5 years, we were all the way from California, Arizona, New Mexico, Texas, all the way up to Georgia. So we had properties all over the place. We sold out, made a good chunk of money, and I thought I'd learn how to play golf. And of course, that was a very boring game when you had never played it before. And after 9 holes, I was ready to go and say, I've got work to do. And before I knew it, I started working again. And today, I'll continue working the rest of my life, and as long as I can enjoy what I do and have a great staff that can continue doing and running the company, preserving my money.
That's good. The way I play golf, they told me to take 2 weeks off and quit. You know,
That's what I'm doing right now. I'm quitting for 2 weeks, and I might end up quitting forever.
All right, if somebody's starting out in the business, what advice would you give them?
Well, first of all, you got to. I've always said the A's teach the B's to work for the C's. The A's are the ones that your professors, your doctorates. The C's, and I was a C student. I can't recall how the heck I got through high school working 44 hours a week. I honestly go back and I can't recall how I did my homework and how I got through. I was a C student. Luckily, I liked accounting. I liked numbers. I liked dollars. And I made a pledge when I was a young kid that I was going to be wealthy. And accounting came very easy to me, and that I got A's in accounting. And fortunately for me, being a Hispanic, Lopez, and under affirmative action, I got offers from all the big eights. So I was the only Hispanic in Los Angeles there for a long time. But I went out there with the idea that I was going to start out and pursue my dream. So starting out, and a mistake I made is what I was doing very well doing my small deals. And 1 year I thought, well, I know how to do it, and I'd try to do the big deals, and I failed. Very quickly I went back and started doing these little deals, and before I knew it, I was doing big deals. So what I always said, your goals should always be goals that you can attain. Don't go for goals that are so difficult to get to that you waste your life trying to make that big deal or hit the home run that you never get to hit it. So it's little steps at a time. You've got to learn how to crawl before you walk and before you learn how to run. So it's a small, and before it happens, you get old and you've done it.
Yeah, good for you. Good for you. Any last words for anybody? Or?
No, I see a few of my friends out here that got their smiles. I'm probably going to be questioned tomorrow to see if I was sane or not. No, but thank you for having me at the panel today.
Thank you. And we'll have a chance to ask Bert some questions. I met Scott Nauer 30 years ago. I think he was 12 at the time. Scott, most of you know Scott. He's been a Phoenix fixture forever. I actually was thinking about this panel yesterday, and actually dreamed about it last night. And what I dreamed about is I had died and was walking the streets of heaven, and I ran into Robert, and Robert was with this really, not to be politically incorrect, he was with this really ugly woman. And it was really bad. And I went over, I said, Robert, I went over to say hello. I said, Robert, how'd you end up with this ugly woman? He said, well, I got caught cheating on my income taxes. I have to walk around with her for 500 years. So I said, well, I wished him well, and I kept on going. And then I ran to Marty, and he was with a girl who made Roberts look good. It was really terrible. I said, Marty, what happened? He said, well, I got caught cheating on my income taxes, and I have to walk around with this woman for a long time. And I wished him well. I kept on walking down the streets of heaven, and I ran into Scott. And Scott's with this absolutely breathtaking woman, obviously an aerobics instructor, just great. I said, Scott, how'd you end up with this gorgeous woman? He said, I don't know. All she does is talk about how she got caught cheating on her income taxes. So much for that dream. At any rate, I'll let Scott go into detail if he wants, if he's still talking to me. Scott has a tremendous background. In fact, Francis, wherever you are, I don't know how you lured him away. Boy, that has to be real interesting. Scott, as you know, as you probably know, started out with Starwood and basically was with Starwood Capital and basically has done tremendous developments with them, the waterfront, Biltmore Mountain Estates, Legend Trails. His fingerprints are on just a lot of great stuff. He had his own company for quite a while where they did over $1.2 billion in multifamily properties. And for the last 4 years, somehow Francis hired him away. I don't know how or why, but it must be a real interesting set of conversations with two strong-headed guys. I'd love to be a fly on that wall. But at any rate, again, Scott has a tremendous background and has worked in virtually all property types for quite some time. So, you know, over the last 20 years, you invested in various markets across the country. How do you determine what you're going to focus on?
That's a great question, Elliot. I think first...
Well, that's because you gave it to me. That's what,
What was the question again? First, we really believe that there are opportunities in all markets at any given time. We just have to find them. So it really is a deal first, market second. But we do look at those markets which are perhaps a bit more undervalued than others, and we focus a bit more on those than we would in other markets. But most importantly, the market cycle for Portland is different than the market cycle for New York, and it's different than the market cycle for Phoenix. And I don't even know if Tucson has a market cycle. Do you guys have buildings and stuff down there?
rarely. Yeah.
But we look at the deal first, and we really try to act on opportunities that come to us from our various deal flow.
How do you time the entry in and out of markets? And, you know, what leading indicators you look at? How do you know when it's good and when it's bad?
Yeah, we try to look at opportunities where we believe we have a bit of a competitive advantage. You know, Jack Welch said, if you don't have a competitive advantage, don't compete. So we try to find things where we can add some value through the acquisition. We know the asset well. Perhaps our ability to move very quickly on a large and complicated transaction can be rewarded. So we look for those opportunities that we think have some complexities, some problems that we can solve, and some value that we can add. But at the end of the day, it really comes down to focusing on those areas where we believe we have just a little bit of an edge.
With that, you know, do you have a favorite asset class? You've worked in so many, or do you have something you like better than others, you're biased towards, or is it really just doesn't matter to you?
It depends on where we are in the market cycle, but again, there are opportunities all across the boards in every asset class. I focused an awful lot on apartments, and I can tell you that from 1985 to the last quarter of 2014, apartments returned about 8.8%, and office buildings did about 6.5% during the same time period, and the multifamily had much lower volatility. So it's been a very good performing asset class. Retail, Marty, did about 9.2% during that same time period, but I think that's really due to your deals that drove up the average quite a bit. So I think that's because of Marty's transactions.
Are you sure it's mine?
We're really somewhat agnostic on our asset class, but it again depends on where we are in the market cycle and which opportunities are presented to us.
Okay. And Don's going to talk about this at length, but what do you think the state of Arizona could do to improve our future? You've been here.
Oh my gosh. Well, first I'll tell you, it's a wonderful state. And for you young people, you couldn't be in a better place. It's very transactional. Over the next 20 years, we're going to need more of everything. We're going to need more office buildings, apartments, more homes, more industrial buildings. We'll even need more retail. We won't need any more check cashing centers or dollar stores. We've got enough of those, Marty.
You took my entire strategy away.
Marty actually wanted to do a strip center that was anchored strictly by dollar stores and check cashing places, but I think we have enough of those right now. So Arizona's a great state. We've got a great educational program, one of the finest university systems in the country. We've got a great community college program, and we've been the second or third fastest growing state in the country since 1950. But we can do a few things better. We need to focus really on 5 things, and I like to think they're education, employment, our image, incentives. That's 4, that's enough. I think it'd be nice to see that we could be the 23rd state, I believe, to allow our community colleges to provide meaningful four-year degrees to qualified students.
All right, so we're not going to get the 5 things you talked about, is that it? All right. The other thing you've always been good at over the years is capital partners. What do you look for what do capital partners look for in an operating partner?
Well, if you have a great deal, you can find in enough time, you can find the capital partner. So first of all, a capital partner wants a tremendous opportunity. If you have one, you'll get funding. It might not be good funding. You might not make any money, but you'll get funding. Marty, you're a perfect you're a perfect partner for a capital partner. You're diverse, you're vertically integrated, and you've got a great track record. Our capital following is really because of Francis's wonderful reputation in the marketplace and his outstanding track record. So,
Wait, which Francis are we talking about? Never mind. I'm only kidding, Francis.
So if you've done well over a long period of time and you have a great reputation, you can always attract capital, but you need to have a deal, or you need to be able to show that you have the opportunity to bring proprietary deals to the capital partner they may not see otherwise. So deal flow, ability to execute, and ability to add value. Of course, like the other gentleman on the panel, if you have enough money to do the deals on your own, you can always attract capital. If you don't need money, it's really easy to get.
That's true. And what traits have made you successful?
I'm sorry.
All right, he's surprised I asked that question, I guess. What traits have made you successful?
Well, I never give up. I work really hard. And most importantly, I think I try to surround myself with people smarter than I am. And that really hasn't been that difficult.
All right. And same thing, luck versus skill, same question.
You know, back in the 1960s, when you were, I think, in graduate school, I was still a little kid.
He happens to be right. That's the scary part.
A professor at University of Chicago developed something called the efficient market theory of random walk, and business schools all over the country picked it up, and it's just wrong. I can tell you that luck, of course, always plays a part in any investment, but luck does not explain the long-term success of great investors like Peter Lynch or Warren Buffett, in real estate, Barry Sternlicht, Francis Najafi. That takes skill, that takes discipline, that takes focus, and we've seen it time and time and time again. Short-term luck is always very instrumental in your success, but over the long term, it takes a lot of other characteristics, skills, effort, time, and passion.
All right, one last set of questions. In today's world, right now, what do you like? What don't you like?
I think the spread in valuations and cap rates between major markets, major coastal markets, and secondary markets is too high. So I think the smaller markets are fundamentally overvalued. And gosh, if you're buying a 3.5 cap on a multi in Newport Beach, you'd better hope that interest rates stay down for a long, long time, and you're really counting on some extraordinary growth if you're going to do very well. I would point out that Mandy said that Peter bought Manhattan for $28, and today, 388 compounding periods later, it was worth $1.25 trillion, and I just ran that. That's only a 6.5% return. It didn't even cover the pref. And the whole dollar was good, but it wasn't that good of a deal. And what about the environmental impact concerns and the unpaid tax liabilities? I would have fired Peter, I think.
Thanks. All right, we'll get a chance to ask Scott some questions in a few minutes as well. Thanks, Scott. Marty didn't know it, but I was a neighbor of his when he was growing up. I grew up in Queens, he grew up in the Bronx. And sort of like Nathan, he ended up out here and never left. The one thing I will tell you is Marty has been a broker for a long time. I once asked him if he would find me a house near some water, and he tried to sell me a house with a flooded basement. So I don't know if Marty is a real interesting guy. I'm going to talk a little about this, Marty. He started as a broker and has built up this very large, the largest in Arizona retail brokerage firm. It says 31 seasoned brokers. How many that aren't seasoned? Never mind. All right. He has Dorito Development. It's 5 million square feet, including the pavilions. And I'm going to be anxious to hear what you've done to the pavilions because it's rather amazing in terms of the tenants you've brought in. He's got a property management company. He's got an opportunity fund that has 44 assets, and he's going to add 5 more assets this year. And he's got a land development company for new grocery anchors. So he's really started as a broker and managed to essentially diversify into virtually every aspect of real estate. I was going to ask you a question, but I'm just going to start with this, and then you can, I want you to point out that Marty's the only one who brought promotional material because he's a salesman, all right? That's the way it is.
Elliot, I'm always leasing space.
All right. How'd you go from being a broker to being a major owner to being a major developer of retail in the Phoenix area? That takes guts and talent.
Yeah. For me, it's all about the client or the customer. And in my business, or our business in the retail focus, is the retailer. So as a broker, I really work closely with the retailers, helping them find great locations, and then locations that they can produce a lot of sales. So once I built up a clientele with that, the next step, they wanted to expand, and it actually was the RTC days, and I had a bunch of retailers that wanted to expand on a piece of property, and one thing led to another, and I said, here's a great property, why don't you folks do it? And they said, yeah, it's great, Marty, but who you can bring as a developer? And I mentioned 3 or 4 different names, and they went, well, he's bankrupt. He's not around anymore. He left. Why don't you do it? I said, well, I have no money. They said, well, we'll sign leases. And so I ended up borrowing money off some credit cards. And I learned, having a finance degree, about promissory notes. So I used a bunch of promissory notes and started the company that way.
What was the toughest about the transition from going from one to the next to the next?
The hardest thing for us in transition is really people, as far as that goes. Getting the right people, compensated in the right way, and giving them opportunities to grow. And so, to me, I've learned many things over the years, but probably the selection and giving people the right opportunity and keeping people has been probably critical to us.
Okay. Now, don't be modest about this. I saw you get financing at a time when nobody should have been able to get financing. How'd you do it?
At the end of the day, it was on the backbone of great retailers and their balance sheets. I was merely a conduit that put the property and the retailer together to help them expand. So that's pretty much how we do. We started small, being honest, working hard. But we just started small, and we grew one thing after another. People ask me at times, and I just say, how do you eat an elephant? One bite at a time, and that's how we basically do it. One lease at a time, one person at a time, one employee, one customer.
All right, talking about those leases, why don't you tell us about the pavilions?
So the pavilions was definitely creative. I was at a point in my career that I thought I'd pull back a little, and I thought I bought a property at a great price, but within 9 months of buying the pavilions, Lehman filed bankruptcy. If there was a national retail bankruptcy, I had it. I had the pavilions. So, and then Target, I was fortunate, Target announced on the front page of the paper, the business section, that they were leaving the pavilions, which no retailer ever does that. So I went from 82% lease to 47% lease within 9 months. So, it was a bit scary, let's just say. But I had a great lender, and that was GE Capital, and they stuck by me because they knew I can lease space. They said, hey, Marty, you're not a hardcore financial guy. You're a guy that can lease space, so just execute the plan. And we have executed the plan. Today we've added 300,000 square feet, so we're 1,000,003 square feet, and it's back to 85% lease, but 300,000 square feet. So how we did it was great people. We had a story, we had a dream, and in today's environment, you have to be really creative filling space. And we were very creative with the users that we put in there.
Such as?
Great question. Such as, so Octane Raceway is one of these tenants that, now remember, if I mentioned some of these tenants 10 years ago, people and my lenders and partners and everybody else would think I would be nuts, but Octane Raceway is 45,000 square feet. What they basically do is you race inside electric cars, sports little cars, and go-karts at about 40 miles an hour. And the way we have the track set up inside is it's inside and then you can go outside. It's enormously successful. If you don't get reservations early, you won't get in Thursday, Friday, Saturday. It draws people from all over Phoenix. It's very classy. It is not inexpensive. It's a lot of fun. So I bring my kids. If you have teenage kids, it's the best ever because they love it, especially if they don't have a driver's license or it was taken away. So Octane's one of the tenants. The other tenant that we put in there was Goodwill. And a lot of people at first were like hard on me about Goodwill, but at the end of the day, you know, Goodwill is all about bargain hunting. And in many retail stores today, when people shop, they like to go bargain hunting. And Goodwill has great bargains. And we did some unique things with them that made it more look like a department store from the outside, and the fact that we have glass windows looking in. They bring all their merchandise from the back. And today there was 2 tenants that were in there, Ulta Cosmetics and Men's Warehouse, that I thought once I put Goodwill would relocate into another part of the center. Not only they didn't relocate, they both invested a lot of money, stayed where they're at, and remodeled those stores for long-term leases. So that was a second one we did at the property. And the last one would be schools. We had a choice to do a bunch of different things, and we chose Great Hearts Academy, a school, and because they bring 1,200 people a day, 5 days a week to our property. In retail, it's all about getting people to come, and then how do you keep them and never let them leave, right? The longer I can keep a customer at the property, the more retail sales we can produce, and then I know I can actually collect rent, which is kind of a big thing. But for us, the school basically, it's an elementary school and a high school, so I'd say 70% of those kids have to be dropped off by a parent. So we get them twice a day, and then half the time they walk the center with their kids in their uniforms after. So that was another unique thing that I've mentioned 10 years ago we were doing that, we wouldn't have done it. So I think today you got to be totally creative on the usage you put in there, and every retailer that you put in, how does it benefit the retail next to them or the one across the street?
All right, now here's some questions. I know you'll never figure out where these questions came from. Marty, what are the 5 things you need to know about retail?
I just happen to have that written down. So you got to know your center. Is it luxury? Is it value? Is it convenience? It's got to have a story. Anybody who's ever leased space from us, and I see some of you in here, know that when I'm talking about a property, we have a story and why I think they can produce a lot of sales as far as that goes. So you got to have a story and why. What are the drivers to people coming to it? You got to think outside the box, which we talked about in retail. Today, anything goes, just about, and so we are very much open-minded on leasing space to alternative users and how will that affect, what kind of customer does it draw and how will that affect the rest of the center? Everybody loves the outdoors. You got to incorporate, and it's hard. It's definitely hard. You got to incorporate the outdoors somehow into your centers. You need these people, customers, to stay at your properties longer. So outdoor spaces are here to stay, and creating them so people can stay is critical. Another thing, you got to create buzz somehow at your center. They got to have a memorable experience as far as that goes. And finally, the internet. Internet shopping is here to stay. Yes, it's growing. No, it won't replace bricks and mortar totally, but it will continue to grow, but so will the overall base of the United States. Bricks and mortar are here to stay, and it's just another omni-channel to make things happen and have these retailers distribute more.
All right, Marty likes lists. Marty, what are 5 ways retail is going to continue to change?
So changing, we talked about anything goes in retail. Also in retail, you're going to see flexible ways of fulfillment, how the product is delivered. Pick up at the store, buy at the store, deliver from the store to your home. And in fact, many of you have probably seen this, but on 60 Minutes they talk about drones, and Amazon right now looking at dropping merchandise off by drones, landing at your house and dropping the merchandise off. So that'll be very interesting. But, today I wouldn't discount anything as far as that goes. iPhones and portable devices, those are going to be more integrated into our life, especially in shopping. You're going to be walking around a store, and there's going to be advertising from Levi's that said, hey, turn left, aisle 2, and we'll give you a $2 discount, whatever it might be. So these things are going to be really integrated into your life. So advertising is big. Obviously, you have price comparison, but all retailers know they have to be lean and mean, and they have to compete. Two other things, and this is kind of funny. You're going to see fewer traffic jams. You're going to have in-store mapping and smart navigation, which will become highly accurate. So the accuracy of this stuff is going to become overwhelming to where if you want to go to the bathroom, it'll say, okay, it'll actually tell you, hi, go to the bathroom, go left, go right. So these handheld computers are going to really control a lot of our life, or give us access to a lot of control. And then finally, the checkout. Everybody's into going into retail stores, buying merchandise, and then checking out as quick as you can once they believe the experience is over. Apple did an amazing thing, is that they continued the experience, and the experience is the checkout. How cool it is, you're looking for merchandise, you're enjoying yourself, you have somebody telling you all about it, and then you go to check out and you just raise your hand or look at somebody, and they come over and they swipe your card, you check out right there, and you're gone. So the checkout counters are completely going to change, and I think it'll happen everywhere from the grocery stores to the Targets to all of them. So I think you're going to see that flexibility too.
Two final questions. One, luck versus skill.
Well, I'd have to say when I first started, it was pure luck as far as that, because I didn't have any skill. But I believe that once you get started and you're paying your bills after a couple years, it really comes down to skill, and it really comes down to the skill of hiring the right people in the right positions, giving them opportunity to grow, believing in a strategy.
And the last question is, have you ever been in a chicken suit that caught on fire?
Yes. Do you really want me to tell this story?
Quickly, yeah.
Okay, quickly. So I was working at Grubb & Ellis at the time, leasing space, and I was doing pretty well for myself. And I thought the best way to keep busy is to own a restaurant at night. And so I had my day job, and then I worked with Subway, and I got a franchise. I tried to get a Subway, and the folks at the time said, hey, we're going to franchise spicy chicken. So we ended up in the chicken business, and so I was doing this at night. And bottom line is, I opened up, and within 3 days, PepsiCo owned KFC, offered spicy chicken, and overnight we were bankrupt. So I called the corporate and I said, hey, I don't know if you know PepsiCo and KFC, but now they're doing spicy chicken, I'm doing it, and I'm on the verge of bankruptcy. Any words of wisdom? And they said, yeah, have you heard about the chicken suit? And I said, no, I haven't. I remember this luck and skill thing, right? So I was very lucky in the beginning. And one thing led to another, and so I said, great, tell me all about it. They told me, and they said, well, I said, great, just send this person out, this chicken man, send him out. So they said, no, it's a suit. I said, okay, we'll send the suit. And they said, COD. I said, COD, I'm bankrupt here. Are you kidding me? And when I went to Grubb & Ellis during the day, my manager at the time said, Marty, you gotta wash your hands better because your hands are red because of all the dye I'm making this chicken, and you stink. So I was getting beat up on both sides of it. So we get the chicken suit. It was a Saturday. I waved it to all the employees. I said, hey, you get in this, it'll drive business. Remember, this is August. So I jump in this suit. Yeah, this is crazy. So none of them would get in the suit. One of them said to me, hey, at the 11th hour, they go, Marty, we'll get in it next weekend if you get in it this weekend. So, of course, I got in the suit because I'm desperate at this point. So I got in the suit and I started walking down Thunderbird 19th Avenue back and forth. Well, in August at 11 o'clock, it's incredibly hot. And especially at the time I was single and everything. And so, of course, I had to go out to beer bong night or whatever else with all my friends the night before and drink beers. So that didn't help either, you know. So I looked like a drunken chicken. So I'm walking back and forth, and I didn't want to go in after an hour because then my employees would go in after an hour. So I stayed out there for like 2-3 hours. Well, it got so bad I was going to pass out. So I laid on the floor on the sidewalk, and I pointed to my restaurant. So cars went crazy. They went buzzing by, and they got, "Get up, you lazy chicken! You bum!" All this crazy stuff. I heard all this abuse, and I'm laying there. I go, God, I'm college educated. I'm still owe money on my college loans. I have a great family. I have a good. Why did I do this to myself? I can't believe I'm in this situation. I'm laying there, almost crying, sweating. And so this blankety blank El Camino car went by, and he flipped a cigarette. So here I am laying there, and I'm like, yeah, good luck. This is fire repellent. Well, fire repellent doesn't mean it doesn't catch on fire. So again, back to that luck. So here I'm on fire, and a full chicken suit, feathers, red hands, the head, and I ran into my restaurant. Everybody ran out and didn't pay. So that's when I learned about cash flow is very, very important in a business when you have to pay expenses. I ended up, it was embarrassing. The dishwasher sprayed me down with a hose. And I sold the restaurant back to Subway for $1 the next week and started Dorito Partners 2 weeks later. Because I thought to myself, it can't get worse than this.
That's pretty bad.
Thank you.
Thanks, Marty. Next is Robert Sarver. You all know Robert. I will tell you that I've been in town a long time, and given the accomplishments that Robert has, what he has accomplished in his life, he really is relatively low profile, because given his accomplishments, he should be a legend by this point. He took his family institution and turned it into a huge success. He survived 88 through 92 and 2008. He was a founding partner of Southwest Value Partners. I know them well because they're a partner of mine in a lot of deals. Highly successful, extremely bright people. He has extensive expertise in housing and land and hotel markets. And just as an aside, he basically decided he had too much money, so he'd buy the Suns. And that was before the NBA teams were worth $2 billion, but he took that risk. Now, I will tell you that he is a banker at heart, and you may or may not know this, that hospitals report that heart transplants of bankers are in strong demand by transplant patients because bankers' hearts have hardly ever been used. I will also tell you that last year he told me that the Suns didn't have a website, and that's because they couldn't put 3 W's together. But he's been so successful at everything else he's done, I cannot believe that success will not ultimately translate into the Suns. I haven't figured it out, but I figure you will. He's also a U of A graduate, and I could tell you some of the stories Schlossberg told me, but I'm not going to do that. So you started in banking. Then you started Southwest Value Partners and later bought the Suns. What did you learn from each of those different endeavors that helped the others?
Well, first of all, your jokes are so old, Elliot. Just like a tip, just a small tip. Like when you start talking about him with a hot aerobics instructor, maybe say like yoga or Pilates, because people don't do aerobics anymore. You're very outdated. Actually, the young fellow that got the Brokers Award, Dad, kind of took a chance on me 31 years ago and leased me 10,000 feet of space for my first business when I had no credit. So it's, tell your dad thanks. Yeah, we paid our rent. We did good. Yeah, we did good. We did good. What did you ask me?
What's your name again? All right, you were
I
in
feel
three.
like I collided with Don over here, and it was like Freaky Friday or something.
You're in three completely different businesses.
Right,
okay?
yeah, right.
What'd you learn from one that helped you in the others, and vice versa?
What did I learn from one? In the banking business, it's all about people and relationships that you build and grow. I also learned that you got to go out and bring customers. And I remember when the bank first opened in Tucson, we took out a full-page ad in the newspaper. It cost $5,000, and the only person that came in the first day was my mom to open a checking account. And that afternoon, I just picked up a bunch of business cards, went across the street by St. Joseph's Hospital there on Wilmot Road in Tucson, and started knocking on doors of medical offices. And I learned really quickly that business doesn't just walk in, you got to go get it. And so you have to have a good sales culture in any business you have. The other thing I learned in banking is, the hard way over time is kind of how to manage and how to surround yourself with bright people and how to know when to listen and how to know how to organize people and manage. Any business gets to a certain size where it's now not so much dependent on what you can do, but the kind of people you can hire, motivate, and retain to work in your business. And so I think I learned that. The real estate was kind of interesting. I got in it a little bit by accident. In 1990, I ran into a friend of mine's father at a wedding and mentioned that the economy was in bad shape and the government was selling a lot of properties and apartment complexes really cheap, and he was in the apartment business in the Midwest, and so he flew out and said, if you ever see a trustee or an auction, come get me and we'll go buy something. And there was one on an apartment complex in Tucson. We went to it, and he was the only bidder. We were the only bidder, and he bought it. And I said, shit, we got to pay for it tomorrow. And it was $6.4 million. He said, what do you have? I said, I got $100,000. I said, what do you have? He says, I brought $3 million of cashier's checks. I go, well, we're short. So he called some friends, and we bought it the next day. I figured he was going to management, and he says, no. He says, I got a horse running. Drop me off at the airport. I go to Hot Springs, Arkansas. You're a smart young kid. You'll figure out how to run it. So first thing I said was, well, I better learn how to manage apartments. So I went back to his main offices for 2 days in the Midwest and followed his property manager around to learn the ins and outs of apartments. And the one thing I noticed is every property he had pitched roofs. And so I knew we only had to have pitched roofs because he said that they're sticklers on that. And so we bought 3,000 pitched roof apartments over the next 2 years from the government, and we sold them a few years later to a big REIT. And I said, shit, if we'd have bought flat roofs, we could have bought 12,000 of them and made a lot more money. He said, well, why didn't you buy flat roofs? I said, because you don't like flat roofs. He says, that's just in the Midwest because of the snow. When I went to buy the Suns, when you're young starting out, you're really aggressive and you're swinging for things and you're taking a lot of risk, and sometimes it helps you because you're not worried about failing because you really don't have anything to lose. But as you get a little bit older, you start thinking about, what's my back door on this in case this doesn't work? How do I get out, and how do I kind of manage my risk and hedge my bets? And the thing with the Suns, I remember my wife telling me she's really nervous. It was a lot of money. We were probably paying too much. Didn't know anything about it. She just said, geez, I just hope we don't lose everything. And I said, the one thing about it's kind of like when we moved to San Diego and we were looking at houses. We were debating between a house at Del Mar Country Club and a house on the beach in Del Mar. And we picked the house in Del Mar Country Club because it was half the price and we got more square footage. But fast forward 8 years, the house on the beach went up like 6 times. And the reason it went up because there's only like 40 homes on the beach in Del Mar. And I said, that'll be the same thing with these basketball teams. There's only 30 of them in the world, and if we have to get out, we'll always be able to get out. And so that's what will protect us. And so really supply and demand, for me, kind of helped me get in the basketball business, knowing that there was such a limited supply that, I'd probably be okay.
How'd you survive 88 through 92 and 2008? Let's go back to banking.
Not well. No, not too bad. I'll tell you something. I had a smart guy tell me a long time ago, you guys may remember him, Lou Poses from Tucson, told me, never judge your self-worth by your net worth. And you can't get caught up in how much money you have or don't have or things are going. And for me, the biggest part about working your way through these tough times is just your attitude, and how you manage your business and waking up every day and just doing the damn best you can do. And some days that's not good enough, and sometimes things don't fall your way, and sometimes you just go home and hug your family and call it a day and wake up the next morning and think it'll be better. So I think what really got me through the last recession, because the first one I actually made a lot of money in, the last one I lost a lot of money, but what got me through it was really just a good attitude, to be honest, more than anything. Just a positive attitude, hard work, and also positioning yourself. In the banking business, if you have enough liquidity and you have enough capital, you can survive. And that's how we positioned ourselves. And we weren't greedy, so we went out and raised a lot of extra capital early when a lot of people didn't want to dilute themselves, and allowed us to double the size of the company. And then you talk about, luck and skill. I got a little bit lucky because I sold a huge office portfolio, took all that money, bought a basketball team thinking the basketball would be fun, and I was giving up money on the real estate. And at the end of the day, the basketball team far appreciated during the economic cycle, and the real estate went down. So, you get lucky sometimes.
What's the future of regional banking? What are you looking
Tough. Regulation is brutal. This low rate environment is very difficult as a banker in terms of getting margins and spreads. The amount of banks out there have shrunk from 11, 12,000 20 years ago to maybe 7,000 today. And so the business is really kind of bad. But that's why I love it, because less people want to get in it. So, what I always try to do, if you're following things everybody likes and everyone thinks is great, you probably ought to be getting out. Yeah. And if everyone thinks everything's bad, it's a good time to get in. So from my view of our bank, it's a lot of opportunity. It's an opportunity for us to pick up more customers. It's an opportunity for us to buy banks. And the worse it gets, the better.
All right, now the thing that everybody wants me to ask, but didn't think I have the guts. How are you going to position the Suns to improve their player personnel? When are you going to have that big fat ring?
Oh, boy, you and my kids. Yeah. Half the time, those damn websites, they're on there trashing me, asking the same question. That's a good question. Let's talk about basketball. Talk about a business that takes both luck and skill. Yeah. I mean, you can do everything right with a team, and if you don't have some luck, you're not winning a championship. We had 2 years where we had a pretty good chance, and we had some bad luck. Yep. 1 year was a bad injury. I don't know if you remember when Joe Johnson broke the bone in his face. And the other one is when 2 of our players just stepped on the court and got disqualified, and we were out. And so it really takes both luck and skill. Basketball and professional sports is really hard for business people that are used to a lot of success. Because like on this table, and most of these guys are friends and customers and all that, and everyone at this table is probably making some pretty good money this year. And most people in this room are making good money. But in pro sports, everybody can't do well. Because every night, half the teams win and half the teams lose. And every time you make a trade and every time you make a deal, half the people come out on top and half the people don't. So everything to do with professional sports is driven towards 500. And none of us think of ourselves as a 500 type player. We always think of ourselves that, hey, if we do 10 deals or involved in 10 companies, we can get 8 or 9 of them right. So it's difficult, so it's challenging. We have, a really good run with Steve and Amari and all that, and then Steve got older and Amari knees weren't doing so good, and we kind of had to start over, and that was a tough thing for me. That's another really difficult thing from being in business and sports. When you're a people person, you like interacting with people. In sports, you got to be just cold-hearted. You got to know when it's time to not keep a guy. You got to know when it's time to trade a guy. You can't be emotionally attached to people. So trading Steve to the Lakers is probably the toughest thing I did, and I probably waited 2 years too long to do it. So we had to step back and rebuild, And now we've got some good young players and some good young picks and good assets and a good general manager and a great coach. We got all the ingredients, but whether we'll get to be the top out of 30, that's hard. When you look at the number of teams that have won championships in the NBA over the last 30 years, it's like 5 teams. So, it's why we've had the 4th best record over the last 10 years. We haven't got to the final place, so it's not good enough. So you keep trying.
Well,
you keep trying.
I couldn't be in better hands. Thanks. We'll get back to Robert in a few minutes. Thank you. And finally, somebody who is a legend, all right? That's you, Don. Okay, just thought I'd point that out. Don has done amazing things in his life. He was a commodities dealer from 1950 to 1964. He sold physicals, coffee, cocoa, rubber on Wall Street, and then retired and moved back to Arizona. He is also a U of A graduate. He then got into real estate development in the mid-'60s with the acquisition of raw land in Pima County, including the 12,000-acre Howard Hughes property. But he's done other things. He was one of the original owners of the Suns and was with them for 20 years. He was one of the original owners of the Diamondbacks and does have a big fat ring. For that, he was a co-owner, or he was an owner of the NBC affiliate KVOA in Tucson. He did Arizona Mail Order, Old Tucson Studios. It goes on and on. And everything he has touched has essentially been improved and been successful. But what I really want to talk to Don about is his perspective. He's been around for 50 years, and I think is in the best position of anybody to answer questions on what's going on in the state, how things have changed, what has to improve here. And since you've been around 50 years, as you look back, could you give us your thoughts on where the state stood in the past, where it is today, and where do you think it's going?
First, I'm not the one rags to riches. When I left the company's business, I was a fan like it on.
Yeah, you got to turn on number 5.
That worked.
You didn't miss anything, folks.
Good job.
So you mentioned earlier people came out for different times. When I left my family business, which was not rags to riches, I came out with some money. And all my father wanted me to do was keep it. And it was very easy. The one thing that I learned, and it's really interesting when you listen to the panel, what happened to me is I fell in love with Arizona as a youngster. 1939, 1940, my folks left me here and went to the Far East to live. And so I was alone for a couple of years until the Second World War, and my dad was recalled to Washington to help out. So I had this love affair, and I've always had that, and it was very bullish for me. And so very simple, not as professional as this group here or all my friends, and I admire them. I just came out and saw this gorgeous property and saw the few people only, looked at Phoenix, but my wife thought Tucson was a better lifestyle, and so I just bought property. It was 1,000 an acre, and I went up to 2,000 an acre eventually. But it was not a plan. I wasn't taught that in school or anything. I was a commodity guy, so I bought as much land as I could. But the basis of all the things you say is buying this, selling that, and doing that was because it was very easy. At that time, came back in exactly 50 years this month, and started to do this. It was a very easy picking. I didn't have any real competition, especially in southern Arizona, although I did buy up in Phoenix and everything. So I was not as professional as the table. And Roberts knows too much about me, so he can deny it. But I was smart enough to sell him the team at that time.
Hey, I will tell you, first of all, this is the only guy that's bought 400 acres for 1,000 an acre and sold it for 100,000 an acre. I don't know anybody that's made 100 times their money. This guy. And when I said I was worried about buying the team, the biggest reason I personally was afraid to buy it is he was selling it. And I thought, if he's selling something, what the hell am I doing buying it?
I appreciate that. You know, my reputation is like a legend because I've never done what these guys do. I was more speculative. And when you get started being in the commodity business, it was easy out here. And all the things that I've learned and everything was surrounding myself with smarter people because of what I had. And it was mentioned by 3 or 4 of us here. So you have the nucleus of it. And the other thing is on your 5 questions, if we ever get to that, and I decide to answer some of them, the fact is that it's being at the right place at the right time, but having such a positive attitude about the state. But now, the negative side. I am one that's very disappointed in Arizona. We have a home in the East. I go east to New York, Long Island every summer. So I mingle with the big boys out there on Long Island, and they talk to me from Wall Street where the business was. And they're all disappointed. This state has such a great potential, and I really should address, because I may not come back for 3 years. I'll be 90 then. I don't know if you'll invite me back. But it's disappointing because it's such a marvelous state. Geographically, it's probably the very best. And the people are fresh and they're young, as it was said. And we have some education going along. I have to be careful with Robert when I say this, but the money, the big 5 are never around. Robert is so successful because of it. But there's dynamics here, and we don't get advantage of it. And when they tease me back in New York about all the stupid things that we do, it's upsetting because the state is so much better. And here, I don't know if I'll have another turn to talk to you all, but we should do better in all aspects, certainly in politics, which is totally disappointing as far as I'm concerned, how we elect these people and what they do. And so, on the latter part of my career in life, we spend the family, and Philanthropic does whatever we can to help the community along. And I love to do it. I don't miss a meal by doing it. And my guys that work with me, my partners and associates that I've mentored all along, can continue to run the company as well as they do. But I'm out there differently. I want to express to the people what a marvelous opportunity that this state gives, that we moved out of New York and came back to Arizona after all these years. And I'm disappointed, just like I am in some of my businesses, when they don't do as well as they should. We have not arrived to the position that we should be, and we should keep that in mind. They have all these heavy hitters, all of my friends, we've all done well. But we just have so much baggage that we don't deserve. We just have to have a better reputation and a better relationship. And you're all younger than me, everybody here, and that's the legacy I want to leave. My grandchildren want my money, but my legacy is really to leave the state in a better shape and condition than when I came in 1939. So that's my thing.
And what are you going to do to see that that happens?
Well, I haven't had any luck in the politically arena. I can't mention any names. They're all friends of mine, and sometimes I need them, or used to need them. I don't need them anymore. Some are too old and senile anyway. But what I can do is talk to people like this group that you've put together that's the core of the business community and the core of the people every day that are out there at every avenue and every venue, and have them understand where somebody like myself that had such good luck in this state, and my family has enjoyed it to such an extent. And fortunately, my children will be left and grandchildren and for a period of time on. I would like them to see a better climate, and not the best climate we have, but a different type. I just think that we have to keep that in mind when we're active like we are in business, and everybody here is competitive. Everybody here should be successful. Everybody will be, because the state is going to grow. Arizona is very fortunate geographically. But I think you have to make a part of your process and of your time. My guys sometimes resent it in the company because I'm spending more time as the years wane by trying to promote better government, better education, better high-tech social well-being. Medically, Phoenix has done great. We just are making a deal in Banner School and in the U of A so we can promote that. Those are the very important things. I guess when you get to be a certain age, you're not as selfish. I was as tough as Robert's father happened to be a very dear friend of mine. He's a pretty tough guy. And he and I were tough it out on everything we did, and that's, I guess, why I'm finally up here for a seance. But when you look back on it, like I do, I just like to leave the message that it's marvelous, but we're only halfway there, and I'm more than halfway there, so I'd appreciate help.
Do you have any other advice for somebody who's starting out?
Probably no. Well, I mean, I'm not a good example. As Umberto says, it wasn't education that got me there. It was the background and the family and the discipline and everything. But the biggest thing is you have to love what you're doing. And the hardships that come along, because I've had some. This week wasn't a good week. I have a couple of marinas in Cabo San Lucas. I had 2. Now I have 4. I don't think you financed it, so you don't have to. So, it's good luck and bad luck, but the attitude that all of us in this room should have, we're damn lucky to live here, lucky to have a future in front of us because we're in the right place. But we have to drive that thing further, so it's the attitude that I have all the time. And I instill that on the people that work with me. They're all partners and associates. And I instill that with the people that I do business with in this panel. It's obvious they love what they're doing. The people in this room should do that. So I think that's the biggest thing. I have 4 other points that don't mean diddly, but that's the one that counts.
Well, if you add them together with Marty's 5 points, they actually come to 5, so that's good.
All right. Invite me back. Thank you.
All right. Thanks. For those of you who are able, I'm going to have about 10 minutes of questions if there are any. So if you've got a question of any of these gentlemen, please raise your hand. Yes, ma'am.
My question's about interest rates, and I would like to start with Scott. If I may, where do you see interest rates in the next 12 to 36 months, and why?
Ask Mr. Sarver that question, but that's fine. The global economy is still quite weak, and I think we saw Treasuries kick up the close date about 265. They're going to move upward, but not dramatically. We are seeing a rapid decline of quantitative easing. The money supply is not expanding as rapidly. So that will cause some upward movement in interest rates, but not as much as I think many people are projecting. I really look for rates to stay quite low for quite some time, mainly because of the weakness in the global economy. We're seeing good employment numbers, but they're not the type of jobs that we really need to create, and we're just not seeing a global economic recovery that would really drive rates much higher. We're not going to see a hyperinflationary environment, and we're just not going to see much upward movement in rates. But I'm always wrong.
I'd agree with that. The government has pretty good control on short-term interest rates, but long-term interest rates, they really don't. So, in terms of real estate, I still think it makes a lot of sense to lock in some of your longer-term fixed-rate debt. We sometimes forget how low rates really are, just like 30 years ago when Treasuries were 15 and 16%. The government had a hard time selling them because everyone thought rates were going higher. So I think when the longer-term rates do start to move, they may move a little faster than people think. But I think definitely short-term rates are going to stay low for a while.
I'm a borrower, and I agree.
I also agree because I'm a customer of Robert, and he's helped us grow the last 5 years. So, Robert, I agree.
I like him at this level, and I agree.
Next question. Yes, ma'am.
I'd like to know if Bert came out of the shell. You said you were an introvert, and at some point in time in your life, when was that?
That would have been after I graduated from high school. Jesus, I remember, I'm trying to recall, with Deloitte, they had a program where they would, where they would teach you how to speak in public. And I kind of trying to, anybody remember that program? Toastmasters. Yes, and I was invited to Toastmasters, so they asked me to get up and talk about 5 minutes about rags. And God, I got up there and I stumbled, and it was so embarrassed that from that point on, I shed that embarrassment, and I said, God, it doesn't matter what everybody thinks, it's how I feel. So from that point on, I started feeling it just, it's okay.
Yes, sir.
I'd like to ask Marty about pavilions, unique uses, and the Saturday night car show, and how it affects your project positively, negatively.
I inherited the car show, so I can't take credit for it. But it's really an illegal use at the property. And it was really started with Vestar and really ran by McDonald's. And then McDonald's, the folks who had it, had basically 3 cars that he liked, and he brought his friends, and it blew up from there. And it's been enormously successful. So I've tried to keep my hands off very successful things, and we let them do their thing. Where it causes me problems is that the Home Depots of the world, at times, it's tough on parking, but the amount of people that go there, you can't replace the advertising. So it's been a big success, and the retailers have put up for it for a long time, and it continues to grow. And in fact, that Barrett-Jackson now kicks off their whole event with a road rally and a judging at the pavilions for basically Barrett-Jackson week.
We got time for one more. Go ahead. Well, 2 more, apparently.
I know it's a very dynamic panel with all the shifts in the global economy, and because of that privileged positioning, especially because many of you are from Tucson. Where does Mexico fit for you all, and in this market being so unique?
Don should answer that, but I'll tell you, it's a perfect reason why we haven't been as successful as we should be. Because why are more companies from Mexico doing business in Texas versus doing business here? Or why are they going to Utah? It doesn't make a lot of sense, but you'll know why.
I'm glad you asked the question. We have neglected the Mexican border with the market. I think right now there's disparity between Tucson and Phoenix with I-11. My other dear friends and partners and associates up here are trying to have I-11 go from Phoenix to Vegas. That's a mistake. It should go from the Mexican border through Tucson or around Tucson all the way up, because Mexico is the prominent place that we're going to be doing business. They're breaking out of the third-class things for sure. They're going to be a major power. There's going to be less of a difference than ever before. I'm not talking about the politics of the Hispanic community. I'm talking about what Mexico has. The state of Sonora is next door to us, and they are strong and powerful. But what happened is Texas is so damn smart. While we were screwing around with the border, they built a road from the state of Sonora to them in Texas, so we're going to be circumvented. That's one of the things that I was saying to you all. We've got to wake up. It's an opportunity. We have to put it on. It's not selfish. It's for the state. You have a road that runs from the Mexican border through here all the way up to Canada you've got everything. We are geographically located for it, but for some reason, and we're all doing well, but it's terribly important. I'm glad you asked that question, and that's one of the things that I would have answered. I'm personally with a few friends fighting for that border and to open it up. And I hope you all come consider it, because some of us are just doing I-11 from Phoenix to Vegas.
All right. Any other questions? One last question. I guess that was the last question. Help me thank the panel. Great panel. The bar is still open.
You want, yeah.
The Broker of the Years, can you please come up here so you can get your boxes for your award?
Yeah,